Good morning, Paul Georgie from Allendale. It's September 19th, Thursday morning. We've got grain markets higher this morning, and I think a lot of the reason for it is the carryover from the Fed's decision to not taper the bond buying that's underway, and the reason is Bernanke wants to see more solid evidence that we've got economic growth under control. So that is, I think, a main reason. We've got a weaker dollar off of that. The weaker dollar, in turn, is supplying some hopes that demand can pick up, because as the dollar weakens, it supplies and cheapens our prices on the world market, and that could help demand. Also, the rain that's moving across the Corn Belt has now turned from a bearish sentiment in the market to a bullish sentiment. Traders are talking about, well, it's slowing down harvest, therefore we need to see a price rebound. So those are two main factors that we've got working this morning that is providing some support. The USDA will release their weekly export sales numbers here at 7:30. We'll be watching that very closely. And as the U.S. harvest pace continues to increase, we're seeing a lot of volatility in basis. Different regions where grain is starting to come to town, we're seeing tremendous movement in basis, 20, 30, 40 cents. Some days the quick ship bids are extremely volatile, so if you're harvesting grain, you want to make sure that you check those bids before you take your crop to town. And that is expected to continue as we move forward here until we get into full-fledged harvest. And as basis weakens, producers say, I'm putting it in the bin. As the bids increase again here in the next week or so, they likely will move some grain and move it rather quickly in order to take advantage of those 20, 30 cent moves in basis. Other news, Ukraine announced overnight that they're going to produce 29 million metric tons of corn. That means that they likely will export about 18 million metric tons, which is making them the number 2 exporter of corn in the world. So they're right there with Brazil and Argentina. So another weight on the corn bull's mind. The other news, China is on vacation here the rest of the week. They've got the Autumn Moon Festival going on there, so they're going to be out. That could limit some of the volatility and trading volume that we see in the grain markets here over the next 2 days. In Pharma, we'll be releasing some estimates of new crop acres 2014 to 2013, and also some 2013 numbers for planted acres. That's expected to be out tomorrow morning at around 10:30. So trade's going to be watching that closely as well. In the livestock trade, they're getting the benefit of this move by the Fed yesterday as well. The cheaper dollar and the sharply lower dollar that we've seen yesterday is providing some support and ideas that export sales will increase for U.S. pork and beef. That's providing the catalyst that we've been looking for in this cattle market to jumpstart this thing, get it moving higher. As we know, we're going to have tighter supplies of fed cattle as we move forward. The Zilmax switch from not feeding it to other alternatives should reduce the supply of fed cattle that's available in the marketplace here very soon. We still think that the first quarter of 2014 can give us some extremely tight cattle numbers, especially if we can keep up the demand that we've got right now. Choice beef yesterday did show some strength, however. We were up 28 cents, select up 75. Pork cutout values were up 91 cents yesterday. The hogs cash markets in the Iowa Minnesota market yesterday was sharply lower. On the index, we've seen expect that we should see some increasing numbers in market-ready hogs. So we'll be monitoring that very closely. But funds continue to support the hog market on any kind of weakness. And if they step into the cattle, it could create some excitement there as well. So stay in touch with your Allendale research and your Allendale broker. We'll try to answer any questions you got. You can reach us at 800-262-7538. And have a great trading day. We'll talk to you tomorrow morning.